Hello folks, how you doing? It's another time I'm going to record again this video for you. I'm recording again because the previous time I did it wrong. I recorded it and unfortunately my mic were off, so the video has no audio. And I was crazy mad, like, oh, what the fuck? I lost all my minutes explaining the chat and things went down like that, like the video has no voice. But all good. Challenges are part of the lane, so we have to keep on pushing. We can't stop. Okay, without wasting our time, let's dive in direct on how price books. Okay, I won't speak about the weekly profile because that won't be great enough for you to get information about what price does. But very quick, we can see here how price booked this week. On Monday, we had a classic sale day. On Tuesday, the day was a little bit contradictory. We had high, low, high, so double leveling. On Wednesday, it was a very clean day for a classic buy day, like up market maker buy model. On Thursday, price were not pretty enough to catch big moves, but yeah, we got an entry from this low to this high there. On Friday, price did double delivering. We opened here, manipulated lower, very deep, very deep inside this Wednesday, Thursday's range, and then price rejected the optimal trading entries, and we came back to the opening of the Friday's price. Yeah, that is. Let's break down what happened during Monday's price action. First, before doing anything, you have to make sure your chart is presented in New York Times. You have to set your chart into New York Times UTC negative 4, but the UTC negative 4 isn't a must, but make sure your chart is in New York, because sometimes New York may be change. New York Times may change to UTC negative 5. So what is stating, let's go direct to our chart. First, I used to mark my key levels where I think price may probably move toward or from it. Okay, I like to check on 4-hour time frame. This is my very beautiful time frame where I used to check for key levels. And here, immediately after the day open and the New York Midnight Open, after the open of the New York Midnight Open, this candle here, I would like to cross check the near PDRAs which are around me from the previous day's price action. By the way, I don't like looking at old prices. No, I just like to cross check the previous day's price action for me to trade the current trading price. Okay, so here we had our fair value gap here from the left hand side, the 4-hour fair value gap. See this gap here, price traded in the gap and then rejected the gap, and we came toward these lows and even deep down the range of the Friday's price action. This one, Friday's range price came down to the optimal trading entries of the Friday's price action, but I cannot just uh, target the what these optimal trading entries direct, but I would like to cross blend my ideas with this fair value gap. This one, the big fair value gap. In case you didn't see it, I just extended it from this low to this swing. I mean to this week low to this week high. Here is where I'm observing my 4-hour fair value gap in form of buy side inefficient, buy side imbalance, sell side inefficient, and my target will be at the 50% of this gap. You know, price used to do a fair valuation of the price, so price has to trade away from this key level here toward what? Just the midpoint of the fair value gap on Friday. Let's go back on 15-minute time frame where I used to cross check for my confirmation entries where I want to see price giving gears toward my take profit. So I have my solid take profit around there, which is the midpoint of the 4-hour Friday fair value gap. I mean 50% of the Friday fair value gap. Okay, here is where I'm currently looking for entries, and where I am looking for entries from this key level here, which is a 4-hour fair value gap. Okay, now let's zoom what happened around here. Here is where we're gonna get a lot of information about price delivery. Trying to make this video short, so some information won't be here, but probably they may be in the next video. So here, price opened at the New York midnight open here. New York midnight open is a very crucial time because here is where the Daisy's transaction begin. Okay, there in both forex and stock markets. So these times are very good for me to look for possible high probability entries. And I'm going to mark it in terms of the vertical line by time and the horizontal line by price, because we are trading price relative to time and not otherwise. If you don't consider time in your system, you suck it. Okay, so after marking the New York midnight open, this price level above it most of time or always, yeah, this is no option narrative that if price is above the New York midnight open, that means we're in premium prices, and if you're below the New York midnight open, that means we're in discount prices, right? So you are not allowed to buy below the New York midnight open, and you are not, I mean, you're not allowed to buy above the New York midnight open, and you're not allowed to sell below the New York midnight open. That will be gambling, or you are doing the thing that you don't even know. Okay, the thing that you don't have idea with. Okay, so you have to be very specific. You have to understand it, that New York midnight open gives us premium prices and the discount prices of the day, right? So this is our key level. So our eyes are very open above this favor gap low. Above it is liquidity sweep. After sweep of this liquidities above this swing high, above this swing high here, after price sweep liquidity above this swing high, now I want to see price rejecting down toward my target, which is the 4-hour fair value gap mid level. What I want to see here for me to confirm that price is now delivering lower, I want to see the ICT 2022 model. If you are not aware of it, you can check it from his YouTube channel. You just go search there ICT 2022 model. You'll find there 40 videos. You can skip the first episode, but the second episode to the sixth episode, you have to be very careful listening to him. He's breaking down a lot of games, a lot of diamonds there. So now here you'll see price after the opening of the New York Midnight Open. We traded a little above, we came down below the New York Midnight Open, and then we smoked these highs. And this leg is trading inside the 4-hour fair value gap. I marked it from the higher time frame, and I told you that's my key level where I want to see price trading away from. So now, what am I looking for? I want to see the leg down breaking this low that will responsible to take these highs. Not easy to catch it fast, but if you listen to ICT and understand the idea I'm trying to tell you, you will come here and say, wow, bro, what you're saying is absolute what ICT speak. It's all about this kind of price action or this pattern. I'm not trading pattern, but here is signature I want to see if I want to go short. The price has to trade lower, book buy stops above these swing highs, and then breaking these lows with a displacement, a huge displacement, which leaves a fair value gap inside this leg, the leg that was responsible to break this low. Okay, I'm speaking of this gap, this leg, the leg that was responsible to break this low here. Inside this leg, I want to see a displacement. And displacement is presented by what? A fair value gap. Open your eyes, look at this gap here. So this gap means displacement. Displacement. Displacement after what? After taking liquidity above this swing high here. So now I want to see price delivering lower away from this displacement fair value gap toward what? The 50% of the 4-hour fair value gap formed on Friday. Okay, now our focus has changed not from everything we see on the chart. Instead, now we are looking for the New York Midnight Open in terms of premium and discount, as well as our displacement fair value gap. Good enough, our displacement fair value gap formed above the New York Midnight Open. That means it's a premium prices, which is good for us to sell above the premium prices, right? I have removed that line there to make my chart clean and well representable. Let me remove this fib as well. Let me remove this. Yeah, these are the most important information now. We have a displacement lower. We have a new minute open above it, premium below it, discount. Okay, let's go in now. You should consider when price is going to trade inside the displacement fair value gap, because time is a key factor for us to understand where the high probability setups are going to form. I like to trade inside the kill zones where the new kill zones is found around 7 to 11 New York times. This is my New York kill zone. I want to see New York forming swing point between 7 to 11. This is not random. I'm telling you the thing that I have backtested for years. Go into your chart and observe when the swing highs and swing lows form. You find them are lying between this time of the day, 7 to 11 for New York session trades. Okay, so now we have specific time where we're looking for our trades and the price is inside the key level, inside the right time to trade, inside the key level, above the premium. Wow, everything aligns. This is what we call A plus setup. You can just go short for risk entries uh, at the gap here, below the gap, and your stops should stay above the swing that formed this gap, and your target should be the 50% of the 50% of the 4-hour fair value gain that formed during on Friday here, and this is going to be your trade. Okay, a very good trade. Risk of risk ratio to 3.6 risk ratio, which is good and enough for you to be done for the week. Okay, but let's go here into 5 minutes where you can have confirmation entries away from the displacement fair value gap. Yeah. You may be like, oh, this guy is trying to give a lot of information, and how can I use all of them? No, there are many informations, but they are repeating themselves. Like what we saw on a 50-minute time frame, like the low that took high get broken, and we had a displacement here, fair value gap, and yeah, there was our key level to go short. You're going to check back the same thing in a 5-minute time frame during New York zone. You see here price just traded from this high to this low, and then we block this swing high. Now we'll be waiting for price to come and break this swing low, aggressive, and leave a displacement to the leg or in the leg that blocks that low. See, this leg has what? A displacement. Displacement in form of what? A fair value gap. There. So this gap is 5-minute confirmation displacement, right? Here is where I'm going to get another entries to go short, but our target is still the same toward the 50% of the 4-hour fair value gap. You enter below the gap, stop loss above the swing high, and target what? 50% of the gap around there, and you find yourself you have a 4.3 risk to reward trade. What a good trade with zero drawdown, no stress, because we are entering during active hours. That's why price trades are aggressive immediately after our entries here. Okay, so now let's observe how price just traded away from the entries. Let's observe how price traded away. First gear happened here is formation of this order block. This series of opposite closing candle inside the gap formed an order block in form of propulsion block. Then price crossed below it by bodies. Consider the bodies, not the wicks. The bodies. This is because the bodies tells the story, wicks do destruction. So after price crossed below it, we have confirmed our propulsion block. Then price came in and smoked the propulsion block. This is why this price, this order block after trading inside the key level is referred as propulsion, because price used it to land very quick away from it. So here propulsion broke, and then another displacement, fair value gap lower, another one here, and then boom, our take profits hit. So that's how price book on Monday. And these price action are going to repeat themselves day by day. There is no change in price delivery. Every time price will deliver this way. For more understanding of this system, I recommend you to go watch the video from ICT 2022 model. Make sure you're considering time when looking at the entries without forgetting the key level where price should trade away from. Unless otherwise, you won't see it as clean as I'm showing you here. Thanks for watching, guys. God bless you. Till next time.